We all know, as devastating as events are, from Andrew through to the current day as well, over time the premiums reflect the riskier environment as well. How hard is the model, the algorithm, the underwriters themselves working actually to adjust given these increasing risks? And they do seem to be increasing. And I'll just give you a bit of data, which I'm sure you saw yesterday as well, Bruce, as well. I picked up the Guardian article. There were more than 150 unprecedented climate disasters that struck the world in 2024, according to the UN. Unprecedented means, once in a generation, once in whatever, but 150, things are getting more dangerous. The model must have to adapt very quickly.
Well, the model actually doesn't adapt very quickly. One of the things we use are very long data sets, particularly for things like natural catastrophe. And the good part of it, if you're an insurer, is that you get to reprice every year. Typically, we're selling one-year policies, so we can adjust the pricing to reflect risk. But we're using very long data sets, and any 1 year doesn't change the data sets very much.
So let me just jump in then, Bruce. Is the data set as relevant as it has ever been, or actually is climate change making the longer form data actually less relevant in the 21st century?
Well, I think that is the risk, and that is our concern. And so we would share with you an observation that there seem to be greater severity and greater frequency of large loss exposures, and these are also happening in non-traditional places. Nobody really thought of Europe, for instance, as a natural catastrophe centre historically, but we're seeing floods and droughts as pretty regular occurrences across mainland Europe. So it is important. I mean, if something exponential is happening, which I think is underlying your comment, then the risk is our data will constantly be behind where it needs to be, and that's something we need to be alert to.
Some insurers and reinsurers are plugging into the mix now government help, because there's been a number of state of emergencies declared and governments are sort of getting themselves on the hook for some of the exposures here. How is that skewing the model, whether you're willing to do business in some parts of the world because the government is willing to be there almost as an underwriter where they've not been so involved previously?
Well, I think government partnerships are important to the industry. Not all of my colleagues would agree. They think, to your point, that governments crowd out the private sector and risk creating distortions in pricing. But I think some risks are just too large for the industry alone to bear. I also think it's the case that government has socialised risk for most of its citizens successively over years. And so citizens expect to be bailed out from risk by governments. And we saw this clearly in the COVID pandemic, and we saw this with the energy price shock post the Ukraine war. And so my argument to governments is that they should be partnering with the insurance industry to try to push as much of that risk back into the insurance industry.
This is such a big conversation.